Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2641st edition of Short Term Trading Live with Oscar. Good evening, traders. I was going to get in front of the camera and do all that good stuff tonight, show you a bunch of charts, but it's pouring. It's pouring and raining cats and dogs weather, whatever that means. But it's pouring, raining cats and dogs out here. And I just thought I'd do one of these videos before we lose internet or something. So, this video is the 2641st coming at you on Wednesday night for trading Thursday, September 21st, 2023. Please remember the risk involved in trading. Risky, risky, risky. Trading of any nature or any vehicle is very risky. How do you mitigate the risks? Put your stops in first before you get into the trade. All right, so traders, what are we looking at for trading on 9/21? Today, 9/20, Wednesday, was Fed Day decision day, right? Fed Day number 2, the Fed decision day. Will they raise lower, whatever? We knew they wouldn't touch rates, but we also knew the market would do something dynamic, dramatic, and we would finally get an answer off this chart on what's going to happen. So, Fed decision day is over. We still have a red OMNI, just like we did on Wednesday. For Thursday, like dead red OMNI, same thing with Wednesday, so it's pointing down for now. And what I showed you in last night's video was this. Every time we get down here or up to it, right, if we get near it, it holds. Every time for a long time now. So we got near it here, it held, comes back down, we get near it here, that average, it holds, comes back down, and we get near it here, and then what does the market do? It settles above the average. Look. All right, so now Fed Day is going to happen. Let's put the chart back where it was. Fed Day is about to happen, and this is what comes next. Boom. Fed decision day, we break through it. That's not usual, right? That's the first time we've seen it do that in a long time. So, bam, we break through it, we break down. That is different. What else happened? It went through this solid support line that starts all the way back here. So it went through the support, it went under the average. That is not usual, so things are different now than they were before the Fed meeting. All right, so we now have our answer to this chart. We have our direction, we have our answer. We can take short trades, and we will do that if we can get a fill for trading on Thursday. What else is out there? So I did a webinar. On Monday. And in that webinar, we talked about, let's see, is it here? We talked about the Russell 2000 and that it had a head and shoulders here on the left, but that head and shoulders did not produce. The market, instead of going down after getting a left shoulder defined, a head defined, a right shoulder defined, it came down, but it only came down about even. Look here with the right shoulder and went back up. So it didn't work. All right, that didn't work. Isn't that interesting? Well, then another one develops. Left shoulder, the head, the right shoulder, another head and shoulders, and that looks like the same one is here. And I said to everyone, listen, we cannot call this yet unless it calls itself. I see it. I'm with you. The crude's too expensive. Everything looks wrong. The market should go down, but it didn't on the last one. And until it names itself, gives itself a name, and calls itself an official head and shoulders, we won't make that call. But once it does, we'll make our projections, we'll make our calls. Well, what has happened, and just so that you can see it, last time we had left shoulder, head, right shoulder, we came down to here. And the market came down and never got past it. See that? Well, here we are right now, top day, and here is what happened. The low is here, over here. We didn't quite get past it yet, but it's on its way. The difference with this one is we made this head and shoulders above the 200 ball moving average up higher, and these two shoulders were below, so this has a better chance of cracking now that it's below the 200 ball moving average. So we will be taking short trades in the Russell 2000. This was all part of Monday's webinar. Now we have our answer, and now we know how to trade it. We'll take short trades as the Omni gives them to us. What else was in that webinar? Well, right before we get to that webinar, a quick reminder, kids. We have 21 days till my next Omni Camp, and it's the only Omni Camp for this year and probably out a few months into next year. I have time restraints that will just stop me from doing camps. If you would like to be part of the 4-day seminar here in Las Vegas, October 12th to 16th, you will have to come to OMNIBootcamp.com, OMNIBootcamp.com, right here, and just come down here, do something simple, click this thing where it says start your application, click this once again, and you'll be able to fill some stuff out. Let me know if you want to come to camp. Time is ticking. I've got to make arrangements for you. So if you're coming out, let me know. Click this application at Omni Bootcamp, get started. All right, so what else was in that? Oh, yes, I remember crude, important. In that webinar, I mentioned that this was a crude oil chart that we used for the last 3 webinars in a row. And each time I did a webinar, I would leave a tip on the crude oil chart. So one of the tips 2 webinars ago was crude below 77 will help buoy up the stock market. That was true. Crude was below 77. The stock market went up. Then we did another webinar a couple of months ago, and the tip was staying below the 100 bar moving average is your trigger in crude. And as you can see, that was a great tip. Look at this 100 bar moving average and look at how well it behaved and gave good trades, especially to big swing traders in crude, right? It worked every time. Little jump through here and then it went back to work again. Well, right here, the 100 bar moving average became out of vogue. All of this was in that webinar. So I put strikeouts through the first one. That was 2 webinars ago. I put strikeouts through the second tip. That was a webinar ago. In the webinar we just did on Monday, I told you staying below the 93.50 area in crude is key. We've got to stay below that. If we could stay below 93.50 in crude, that would be helpful because then crude will start going back down and maybe a week or 2 later it buoys the stock market back up. So let's see what crude has done since. We can add in, this is where we were when I did the webinar, and let's add in what happened in crude. So we can just add in the dates of up until the 20th, being today, and apply that, and boom, look what crude did. It went right to that spot and came right. So far, the tip, staying below 93.50 in crude is key. It did stay below. This is for you crude traders. So now it's probably going to work its way down maybe to the bottom of that portion of the channel. And if that's not low enough, you can take this channel and put it down here, and maybe it goes down to the wider channel. And if you get through that, well, that would be really good for the stock market, and it'll keep going. But you can't call for that. I'm only calling for 1 day at a time. It looks like you have another possible sell day here in crude. But point was, it did behave. It stayed below 93.50. Some light at the end of the tunnel. I just saw 550 gas here in Vegas, 525, and that was regular, so we need crude to stay lower. Anyway, wanted to show you that. It worked out really well. Come join me in Las Vegas. I'll teach you my Omni techniques. Go to Omni Bootcamp, and then, of course, just join me at livewithoscar.com and hang out in my trading room. Traders, that's it for today. I will do another video if I can tomorrow to talk about what's going to happen Friday. This video is for trading on Thursday. I'll see you at livewithoscar.com, and remember, kids, say this with me. Stop, SAR, in. Emotions are out. Rock and roll. Thank you so much. Good luck trading out there. Put your stops in and go to OMNI Bootcamp and tell me about yourselves so I can invite you to my webinar.